I think there's evidence that the market is holding up pretty well, even though the rate cut expectation has been significantly dialed back. So I think as long as inflation is heading in the right direction, I think markets can hold up. So last week we got the PCE data, which is slowing down as expected. So that's better than the CPI, which show a bit of concern recently. So I think as long as inflation behaves well and remain in the two handle, and as long as the economic data continues to suggest a soft landing, I think markets should be able to withstand high interest rates. But I also believe that a lot depends on the tech sector, right? It has been such a huge driver of the equity market, and those sectors are obviously they have strong balance sheet, which are not that much affected by these high interest rates. And the enthusiasm on artificial intelligence is a big factor. So we will have to see if that is sustainable.
Yeah, and that's brilliant. You should bring that in. It's something that Karen's been spending a lot of time on as well. Can the tech sector continue to scale new heights, or actually within the US market or within other markets, is it the rest of the market rather than tech we should potentially be looking at because of the valuation disparity?
Well, right now we still believe that the mega cap tech stocks would continue to outperform and do well. That's, I think, primarily because of the enthusiasm on AI. We think it is still actually in the early stages. And I think as long as we still get, positive results from, say, key semiconductor companies, the bellwethers of the AI industry, I do think that the tech sector will continue to do well. And I think for the rest of the market, there is likelihood that they may catch up as well. We saw that happen in the last 2 months for 2023, when there are, further expectations of rate cut and soft landing. So if we are moving into the rate cut direction, I do believe that the smaller caps can start to, rally join the rally as well.
Janet, are the levels we were watching, though, on the S&P 500 a challenge at this stage? Record levels, just looking at a 5-year basis. The extent of the rally looks a bit like the bounce we had post-pandemic, but without the sell-off. So at what point do you think the market sees a wobble from here?
Yeah, I think the reason why the market has continued to rally is because we saw that earnings growth is the delivery is still pretty good, especially for the mega cap tech sector. I mean, obviously a little bit mixed, but generally speaking, I think some of the bellwether companies, especially for AI, they continue to deliver very strong results. So I think the market rally is sort of justified. If you look at some of the forward multiples, right? Actually, some of the key companies related to AI has actually fallen. So I think as long as we continue to get this corporate earnings recovery, I think we are at the end of the earnings recession, by the way. So I think that should continue to support a sentiment. And also, we believe that actually the Fed or global central banks will eventually start to cut interest rate from the second half of this year. I think the market expectation for rate cuts have been curtailed, and right now is sensible. So I think you can never say never, but I think the risk of that wobble actually has decreased given the market pricing of interest rates and the kind of the trend in the corporate earnings.